Hello viewers, we'll be going over natural gas. In this video, we'll be going over the day-by-day probability model, how we find the models, and the forecast model for natural gas. So back to the technical analysis. Today we are up 5.6% on the 1 hour chart. We're currently touching upper or overbought RSI. On the 4 hour chart, we're also touching upper overbought RSI. And as for the daily chart, we are currently above the 18-day moving average and 9-day moving averages. So that is a positive sign that there is a reversal in play. However, we do see a possible resistance being the gap down between January 17th and January 21st. So I do see that as a possible resistance at the first moment, and that is around the price of $2. So we still have quite a way to get there. And as for support, if we do manage to reverse and head down lower, the next possible support that I see where we left off back in February 10th, we made support, a temporary support around the price of $1.76. So if we were to head up higher, that price movement is roughly around 3.5% to the upside, and to the downside it is around 9.3% to the downside. So back to the day-by-day probability model. So as the days progresses to the 7th day, we see a slight favor to the downside. We have a 55% chance of natural gas heading down, between 0 to 13% down. As for the upside, we have a 27% chance for natural gas climbing, between 0 to 13% up. And on the extreme case, we have a 13, or I should say 18% chance of natural gas climbing higher on the extreme case, so 13% to 26%. So let's head to the day forecast model. Again, this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is a trend that I believe is the best match. This trend dates back to July 28th to October 21st, 2008. So let me point out why these two charts are similar. So what we have on the current chart, we start off at the middle Bollinger Band. Next, we proceeded to touch the bottom Bollinger Band, so let's just mark that. We averaged below the middle Bollinger Band, and then we proceeded to revert back to the mean at this instance, and then once more we averaged below the middle Bollinger Band. So we have those points there. And on the trend in question, we start to see a similar pattern here as well. We start off at the middle Bollinger Band. After that, we continue to head down lower, averaging below the middle Bollinger Band. Finally, we see an instance where we pop back to the middle Bollinger Band, and then once more we average below the middle Bollinger Band. So we have those points right there. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points on the current trend. So there's reason to believe that the trends and patterns are the same. The outcome and the forecast should be fairly the same. So the model that we just examined was July 28th to October 21st, 2008. Back then, natural gas continued to fall around roughly 10%. If we head back to the day-by-day probability model, or we see that it coincides with this standard deviation of 54%. So there's a slight favor to fall lower for natural gas in the next coming days. Again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.